The US dollar is a little changed after big gains yesterday. I'll go through the technicals that are driving the three major currency pairs, the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective in this video. So let's get started. I'll start by looking at the euro on the 4-hour chart. You can see the big move to the downside that we saw in trading yesterday. That move to the downside took the price below moving averages, including the 100 bar moving average on the 4-hour chart, the 200 bar moving average on the 4-hour chart. We also fell below the 38.2% retracement. That's of this move to the upside from the August low to the September high. And the 50% retracement, we also fell below that level as well. But the momentum to the downside late yesterday below that 50% retracement could not be maintained. And we started to see a little bit of a rebound in trading here today in the euro versus US dollar. Taking a look at the 5-minute chart just for giggles, you can see the fast and trend-like move to the downside in trading here today. If I put a Fibonacci retracement on that move to the downside, you can see how the price came back up to the 38.2% retracement. So that's just a normal correction in what was a trend day yesterday, and keeps the sellers more in control. What we're going to be watching in the short term, perhaps for this pair today, is what happens here at the 100 and 200 bar moving averages. We moved above it, which it kind of gave the go-ahead to kind of push toward that 38.2% retracement. Now we're within those two moving averages, so it's a decision time for the traders, and that may come off of the PCE data, which comes out at 8:30. Expectations are for 0.2 for the core PCE and 0.3 for the headline PCE, 2.9% for year-on-year, and 2.7% for the headline is the expectations for those measured. So that's going to push us in one way or the other. If we can get above the 38.2% retracement near 1.1686, a new high for the day, that would give the buyers a little bit more comfort and perhaps lead to more short covering after the big declines seen in this pair yesterday. Let's take a look at the dollar versus yen next. And like the euro versus US dollar, big move to the upside. That move to the upside yesterday took the price above this high right here, this high right here, and then this high right here. In between those highs, we did have that run to the upside in the month of toward the end of July into August, before the August employment report, which just sent the price sharply to the downside. So getting back above that area between 149.12 and 149.17 was more bullish and put the price within this extreme. The next key target on the top side we had near the 150 level. That comes right about here, right about there. And as you can see, we fell short of that both yesterday and today in trading. So it's a natural resistance level, and we'll see if the price can get above that level and stay above that level. If it can, then we could easily see a run toward the high price that we saw again at the beginning of August. And if we get above that level, then we start to look toward this other high right here near the 151.20 level. It's hard to see, but up at that level, that would also be another key target for the dollar versus yen. Since I looked at the 5-minute chart for the euro versus US dollar, let's see what the 5-minute chart looks like in the dollar versus yen. And if we were to do the same drill, put a Fibonacci retracement from the low to the high, you can see that the corrective move here today did not really extend toward the 38.2% retracement. We have, and the price is currently, like the euro versus US dollar, right near the 100 and 200 bar moving averages. So the market is in a neutral spot right here, just intraday, waiting for either the shove to the upside or shove to the downside off of the PCE data. If we get above the 150 level, I think it opens the door for further upside. On the downside, if we head back down toward 149.42 and get below that level, that could lead to more, or should lead to more selling pressure as the sellers take some comfort in that, and the buyers have some cause for pause. Finally, let's take a look at the sterling versus US dollar. Yesterday, this pair, what I like about it from a technical perspective is that this pair this trend line right here. This trend line to the upside was broken, not yesterday, but the day before, and then we came up and retested the underside of that trend line, which is always a bearish. We also stay below the swing area through here and stay below this cluster of moving averages. So all that was more bearish, and we took advantage of that. Our sellers took control and pushed the price lower. We got below the 61.8% retracement, and also briefly fell below this low, going back to a few weeks early September. But that could not be sustained into the close, and we started to correct higher. This area right through here is this yellow area is, if you blur your eyes, kind of support or resistance for this pair, and we'll be watching that closely. 133.60 to 133.78. We are trading near that level right now. If we move above it, look for further upside momentum on the failure to keep this break going to the downside. If we stay below it, then look for a rotation down toward the 132.59 level. So there you have it. Look at three of the major currency pairs to kickstart your day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.